following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, folks, we're going to start out with the DAX. I was listening to John Logan. I try to listen to he and Basil and Steve Rhodes whenever I can, and I was able to listen to part of John's show today, and he talked about the German DAX, and I wanted to bring this chart showing you the DAX over the last several months. That we've had these 2-week rallies. We had one just finishing last week. But what's interesting about this one now is we've broken down below the 786 retracement level. That level is held for 4 days. And it looked like we were getting ready to, have a big rally. And then this morning, it was up about 50 points, and then it since gave all that back, and then turned lower. So we want to be able to, keep a close eye on this. But we do have some other things that John brought up that are very, very important, and that is in the breadth index, which we follow, at least I follow it all the time, and I would like to share with you, what I'm seeing here, because for the first time in a long time, we have a situation where the breadth is actually not as bad as it's been in the past few days. If you'll notice the low that we made back on July 27th, and if you'll notice that date, we've had higher lows now. We've also had lower highs, so we're in a triangle. But then if you'll look at the advanced decline line, the same thing with the volume is doing the same thing. That's the chart in the middle. And then if we look at the chart on the far right side of this of these three charts, you'll see that that's the ratio of the highs to lows, and this rate of change over the past 4 days has actually slowed. So it's actually finding some type of base. Now, that doesn't mean it's not going to go lower. If you look what happened during the period between July 10th to July 17th, you'll notice that rate of change actually looked like it was turning positive, and then it turned down sharply. We had a really key cycle date coming in at the end of last week on the 14th. That is very similar to what happened to us in, if you'll remember, in August of 2007, on August the 15th. It was the most memorable day. We had the biggest electrical storms we've had in half a century, I believe. That was the only time that Skype actually went down. I believe it was the first time that it went down. I was just started working with Tom O'Brien at TFNN, and on that day, the Dow Jones was down over 300 points. The NASDAQ was down about 40, I believe, but the Russell 2000, believe it or not, was actually up on the day with all that going on. And Tom was saying, boy, if there was ever a screaming buy signal, that was it. And the market bottomed from that point, and then went up and made a new high into October. It rallied for 6 weeks, and then proceeded to give 70% of its gains back from the time of 2001 when it bottomed. So we're in a very interesting cycle time. That's all I can say at this point, but that's what it looks like. Now we're coming in this morning. We as we get ready to start the day, we have a Gartley forming, a bullish Gartley here in the S&P 500 futures. It went right down to the just a little below the 61% retracement here, and you'll see it here when I put it in, and you'll be able to see that we're at real major support here down around this 2079 level. Now, whether that's going to hold or not, but it's an ABCD move, and we're probably, when the market opens lower, you most probably will be getting buying coming in, so you'll see what that first rally is going to be. But that's going to be a key level to watch, because if we get below the 2078 level, that tells us that we could be heading down, to challenge the lows that we made on August. So the problem that we have is the market has been actually going sideways to slightly up and that is it's a harder thing to call because you don't have a perfect ABCD that you're looking at. But if we take a look at the market that really counts, and that to me is the New York Stock Exchange Index, this will really show you how weak the market really is. This is a it's an hourly chart, which takes us all the way back to early July. And as you can see, we came down into that July 27th area where we made a slightly higher bottom. And then on August the 12th, we made a slightly lower low by just a little bit. And then we rallied for 2 days, which is what we've seen so far. And so this is showing you that the overall rally is very, very weak. Now, that doesn't mean that it can't turn today and become very, very strong, and that would change the whole thing. But we're starting to see things that say maybe this is not what's going to happen. The first thing is that the DAX broke down after, starting out really well and then just rolled over and broke below those lows of last week's. And so we'll want to watch what really happens here because we have some key things occurring that I think will be, very, very important. Now, we have virtually no fear in the market at all, folks. I mean, there are these people out, not that these people, they're wonderful people. I love them all. But the people that are, that don't believe there's any volatility in the market, they're absolutely right. Because we've had very little influence in the DAX. I mean, it has a little tiny rallies, about 5, maybe even 3 points. And the last rally we had from the August low was 5 points. The one we had back from the July 27th move, that doubled in price from 11 to 20. So, but we've had virtually no volatility here. There's no fear in the market anywhere. Whether it's China, it doesn't make any difference of what's going on. The Greek thing didn't have any effect on it. So there's absolutely no fear in the market, just complacency. And that's what leads to some really, really big moves. So we want to watch that, very, very closely. But this will also be a key day because we did go up and then we made a nice retracement back. It's for anybody bullish, you certainly want to be, looking to, buy it down there at that. At 2080 level because that was the perfect ABCD to look at. Now, we did the same thing in the NASDAQ, but the NASDAQ went a little bit lower, had an extension of the ABCD because it's been a little bit weaker. So we'll see in the first 15 minutes here if this low is going to hold, and that will give us a preview of what will most probably, be happening, on the day. That's my guess. So we'll just see what that is going to do at that point. Now, I wanted to mention a little bit about the gold market here and also the silver market because we've had some pretty good moves here in gold. We went down from 2065. Well, let's try it again, Larry. 1065 up to the 1065 up to 11.28. So we rallied $60 and then we backed off a little bit, but we've not retraced very much. We've only come off $15, well, actually $16, which is close to the harmonic number in gold, which is 17. And then so far today, we've made a 61% retracement back on that. So my assumption is that we're getting ready to have a bigger correction in the gold and the silver. And the reasoning for that I see that is I always watch gold and silver together, and the silver picture seems to be just a little clearer to me than the gold market. And I wanted to bring this to your attention here because the silver is just a little bit weaker right now. But I really want to be a buyer of this stuff. I've already bought some. I'm out of it. I want to see it pull back. But if we look at what's happened in the silver market, we made a higher high on Friday where we didn't in gold. We made a higher high on Friday by 1 penny at $15.58 an ounce. The old high from 2 days ago had been $15.57. Then it dropped, a very fast move down to 50. It dropped 48 cents. and now it's done is back. It's gave 50% of that back. So this gold and silver have a real chance here to be something really spectacular. What I'm looking for is a pullback. Now we're in the third day of this pullback in gold, but it's only the first day in the silver, so we have to be a little bit more cautious. But it's not giving it back like it did before. We had a run of 2 straight weeks up when the whole world didn't like it, and now it's backing off a little bit, and it's not giving the shorts any reprise to get through this. I wanted to mention one other thing that John Logan mentioned that is extremely important, and that is about trying to catch a falling knife with this thing. When he was talking about the S&P and some of the other things that are happening with some of the stocks that he's looking at, he's saying to look for the weak ones. Sell the ones that are going down, sell the weakest things, buy the strongest things. Folks, my hobby is I love to play Texas Hold'em tournament poker, and every year in August we have the Arizona State Championships, and you play in a satellite tournament for $100, and if you win that, you win a $1,200 seat into the tournament. There were 1,700 players over 4 days. I played for 3 days. It's a 5-day tournament. I got to the third day, and I played as good as I could possibly play. And I played only against the people that were weaker than me. I wanted to play against weak opponents because that way I couldn't be damaged very well. And I built up a sizable stack of chips, and what happened? I played against weaker players, and I had perfect hands. I had a pair of aces twice in a row, and I had ace king three times, and each time I was beaten by players that shouldn't even have been in the hand, but they got lucky, and the cards came their way, and I was out, and they were in it. But I did what I should have done, and that was I played against the weakest players with the best hand. You can't play any better than that. I just happened to run into a string of bad luck. I did okay for the weekend, made a few dollars, but the theory of poker is the same as it is with stocks. You want to go after the stocks that are the strongest, and if you want to go after weak stocks, those are the ones that you want to sell. Now, some of that really is against what I do sometimes, but part of what I do is the amount of risk that I have to assume when I'm doing these things. And when I have a butterfly pattern, I know that my risk at that trade is as small as it's ever going to be, because if it goes past 1.618, it's no good. And then also if it goes beyond the the 786, I know that it's no good. So those are the things that pattern recognition will help you with, is risk. And that's the same thing you have to do in poker. In poker, you don't want to risk everything that you have unless you have no other alternative, and you don't want to ever get yourself into that predicament. But what John was telling you is you want to short the smallest, short the weakest stocks, and buy the stronger stocks. That's always been the best advice. If you've ever read Jesse Livermore's book, it's written by Edmund Lefevre, which is a pen name for Jesse Livermore, Reminiscences of a Stock Operator. I've read that book 50 times at least, and one of the things he says about there, he said, don't be afraid of high prices. They're there for a reason, and don't be afraid of low prices. They're there for a reason. Okay, we're going to come back, and we're going to talk a little bit about the crude oil market, and then we'll be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and I'm going to continue on with the theme that John Logan brought out, and that is about the oil market. You know, the whole world is one-sided on this. This morning I checked with Bloomberg to make sure the end of the world hadn't happened, and also I wanted to see part of the devastation that had happened in Tiananmen, China with that explosion, and it just, my goodness, it really was something beyond belief to see 2 square miles just disappear. It was really a very, very sad situation. However, in the oil market, it's just universal that the fact is, one of the polls that they brought out this morning on Bloomberg, that 62% of the people in the oil business and traders believe that oil would be between $20 and $30 a barrel. And the people that were actually slightly bullish, those had dropped to only 33%, and their highest expectation for oil now was in the $50 to $55 per barrel level. They laid out a beautiful case for the fundamentals. I mean, Iran's coming online, and the consumption is down. Almost everybody's trying to buy a Tesla. So there's all kinds of things to tell us that you know, the oil wants to go higher. Now, I've posted the chart in for the XLE, which is the oil services, and as you can see, it bottomed back 6 or 7 days ago, we've made new lows in oil, and so far this index has held up. And if you'll notice, the last time, we had a $20 rally per barrel in oil. We went from 42 to 62, and then we went back to dropped another $20 to make a new low. Now, some of the things did not make a new. The heating oil did make a new low by made a 1.27 expansion, of course, but the gasoline futures so far they have held up above the 61% retracement going back to last January. So you can see the difference between gasoline futures and the heating oil and the crude oil, because gasoline has held up extremely well. It made a slightly lower low than Friday last night, right at the 61% retracement, down there at 66.80. So far it's rallied $3 a gallon here early this morning, but that market is very, very thin pre-market. It doesn't really do much during that time before the market opens. So that's the key, to be watching. But there's a lot of other things that are going on in the oil market that look really interesting from a long-term perspective. And I'd like to share just a couple of them with you. And we do have a lot of things that tell us that the market is still going higher, like that we still have higher highs in the NASDAQ and higher lows, so that's still in a strong uptrend. The smaller things have been actually a lot different. Now the next one I wanted to show you is the oil services index. This is a 4-hour chart going back over the past several weeks, going back to that low, and you can see the low of July 27th, how important it was. But if we hold these lows now in the oil service index, we're going to be looking at a potential 135 pattern. That's the pattern that Roy Longstreet and his son Bill love so much, and you'd be pulling right into a 786 retracement, and with the higher bottoms, and we've had higher tops since July. So there's a possibility that the oil services index could possibly be ready to doing the same thing. But the most important thing that I see with the stock index, let's try it again, with the oil services, is if we take a look at the most important stock in that group, this is the ExxonMobil. It's the second largest held stock in the world behind Apple. And this stock, if you'll notice, on last week, and we've had a weekly reversal. In other words, we went lower last week and then we closed higher. We went to the exact 786 retracement of the low from July of 2011. We also made the exact 61% retracement of the low from July of 2010. And so you have two major ratios coming in at that point. And then you also have a situation where you have a 3 drive to a bottom pattern that is formed that sets up, very, very nicely on the long-term weekly basis. You can see that on this chart by the yellow triangles that I've put in there that shows the ABCD patterns forming, and then each drive is lower than the other, and that's how it finishes. Now, if you ask if that worked, well, I don't know, but look what happened at the top when it was at 106. What happened was you had 3 drives to a top. You'll see that in the purple triangle. So all that is an ABCD pattern showing you that you had 3 tops, and the first one you see expanded to the second one, the second one expanded to the third one, and that makes a 3 drive to a top pattern. So that's what we're looking at in oil. When we get back, we're going to talk a little bit about the grain market, because we got something happening in the grains.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN. Everbank is a member FDIC.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I posted the chart of the XLP, which is the staples thing. The reason why I'm showing you this is that you'll notice the little marking that I have on there. That's a Jim Twentyman line. Basically, it acts as a fulcrum, to propel prices higher. For some reason, the market likes to return to that line and form that. And we are going to have Jim Twentyman as our guest on Wednesday. Jim has been one of my closest friends for 50 years. He was one of my original brokers back in 1965 at Clayton Brokerage in West LA, right in the old Howard Hughes building. That's the building that brought in John Wayne by helicopter back in 77 or 78 when he went to UCLA to die of cancer, I believe. I don't remember the exact year. I believe it was late 70s, but we remember the helicopter coming in because the building across the street was the McCulloch Oil Building. Clayton merged with Conti Commodities, and they moved to the top floor of the 20th floor of the McCulloch Oil Building, which was the new building. and the Howard Hughes building was only 12 stories high. It was a huge building in LA at the time, but since it's just like a caddy shack. Still there, but that's what happens. Anyway, Jim's going to be our guest, and then tomorrow we're going to have Norm Winsky on. He has some important things to tell us, and he's certainly had some really good insight into this market, and he has some critical stuff coming up that we want to pay attention to. Now, I wanted to talk just a little bit about the grain markets, because I do follow the grains. And, we had this terribly bearish report with the what you call it, the with corn and soybeans, and I wanted just to show you what's really happening now, because we had a situation, and it's just technically as perfect as you can get, is we had a drop in corn from $4 a bushel down to $3.57 a bushel, a drop of over 50 cents a bushel, and then over the next several days, what's happened is the market went up and stopped exactly at the 61% retracement to the exact penny at 379 and a quarter from the high that we made right before the report. And the report came in, of course, on August the 12th, and then we had the huge break, and then we had the move back up. So it stopped exactly at that 61% retracement. Why is this important? Because that was one of the most bearish crop reports we've seen in recent history. We're hoping to have Rich Anderson on this week. He's been doing a lot of traveling along with his busy schedule, so we hope to have Rich on this week also. But that was really a very, very negative report, and yet the market was able to bounce back somewhat. So this is why we want to, keep it on our radar, but it also shows the importance of these numbers, because we did exactly the same thing in wheat that we did in corn, and wheat had been, the stronger of the markets. But we've got to keep these on our watch list, because if they come back after all of this really bad news, then you're looking at something that could really be interesting, because then you're looking at a market that might have a situation where you're going to extend some of these gains, even in the face of some real bearish news. But that hasn't happened yet. If you'll notice here, we did the same thing in wheat, only it wasn't quite as perfect. It went 2 cents above the 61% retracement that came in at $5.12 a bushel. It went to $5.14 a bushel, which is a $100 difference, and now we've already dropped 8 cents from that level. So these are the things that I'm watching on the radar. So it's important. Now, soybeans were much weaker, and they didn't show the same pattern that we had with the wheat and the corn, but I'm watching that also, because the bean crop is pretty much made now, because we're almost to the end of August pretty soon here, and well, we're halfway through anyway. So unless something really crazy happens, which doesn't look like it's going to, but you never know, the bean crop is going to come in okay, and then we'll come. But some of these markets, they can turn into demand markets too. They're not just weather markets. We had a weather market, of course, from that time on May 26th to early July, which seasonally fit in perfectly. But now this could switch to a demand market, which is totally different. It's much slower. It grinds up, and it just is. It's a much easier to trade a demand market in the grain as opposed to a weather market. Weather markets are very erratic, and you just got to you got to get out when you think you shouldn't get out, because the profits are there. You just have to do that. Fortunately, the corn and bean moves were just nearly perfect where they stopped and where they bottomed also. So this doesn't always happen that way, so we'll take a look at that. First question I had is about the oil. Do I really feel that the oil has made a potential bottom? I'm not sure, but nobody else is either. But what I do want to mention to you is the fact that even though we've made a lower low here on the crude oil over the past several weeks, we have really haven't collapsed as of yet. In fact, the overnight low last night in the thing would be it stopped right near the 786 at that 41.65 level, and we've rallied just 60 points, which isn't really very much, but at least it's giving an indication that it's made some type of a bottom. The real key, I believe, was what started in Germany today with the DAX being strong and then giving it all back and then going below that low of the 786, and after those rallies that we've had, it's really it's been very innocuous, because what the market has really been doing from a technical point, and this is all I'm looking at, folks, are the chart patterns. But we bottomed on July the 27th, and then we retested it again, on August the 12th on some of them, like we did with the New York Stock Exchange Index. But the other markets, the S&P and the NASDAQ, were still in rally mode. So they've been rallying for 3 weeks. Well, it's the most hidden rally that you're going to find, because it's just been very, very suspect, because it's just been a few stocks of those 10 stocks, that we watch, that are so very important, the Googles, the Gileads, the Apples, the Amazon, and all those things. I noticed on Bloomberg this morning that they were talking about Jeff Bezos and the culture at Amazon. Well, fortunately in our family, we have one of my best friends is Mark Douglas, and Mark introduced me to one of the vice presidents of Amazon. And he happened to be visiting in the area, and we were able to chat with him. He's a very, very brilliant fellow. He was from Bulgaria, and he has a little daughter who is she's 6 years old, but she is a savant. I mean, you just won't believe what this little girl can do. You ask her the square root of 6, the square root of 5, the square root of 12, and she can tell you what those are. And there's not a 6-year-old that even knows what a square root is. So she's really a mathematical wizard. Plus, she plays the piano already, so she's a real savant, and he has an IQ way up in the stratosphere. So, well, anyway, he said that the Amazon was a wonderful place to work, and there's a great deal of pressure, but with that kind of a business, there has to be. And the one thing that they fear the most at Amazon is being Bezosed. And that Jeff Bezos, of course, is the owner and the founder of it. And basically, a Bezos is when you get a personal email from Jeff Bezos. You're on the hot seat if you get that. People don't want to get that, so they do their best to stay out of his radar, and they work extra hard, but they're paid extra for that. So, just because you have to take a little pressure, that's the way it is. That's with these baseball players. Man, they give a guy $25 million. He's supposed to play good. Give me a break. The most Willie Mays ever made in his life was $100,000 a year, and he was one of the greatest. I think, was the greatest player ever, and the most he ever made was $100 grand. $100 grand, 30 years ago was, a lot of money, but not like $25 million that they get today. I mean, that's ridiculous. Oh well, get off my soapbox, and we'll move on to the next one that we're watching. Okay, now we have a question about the euro. That's a good question, because we're really approaching some interesting spots here in the euro. We've been in a nice downtrend in the euro. We have a potential for a really nice ABCD pattern up about another 50 pips from where we're trading right now. But as we look, it doesn't appear that it wants to really make that as of yet. But that's neither here nor there. Longer term, the euro is, I've put this chart up so many times, I might as well do it again. I've got it etched here in my computer, and that is the long-term chart. Let me get rid of, you can see that the patterns in this thing are just spectacular. It is hands down the best thing that you can possibly trade. It is just, it's got everything that you could possibly ask for. And we bottomed, in March. We've really gone nowhere. And this level that we made 3 weeks ago at that 108.40, if we ever take that out, that's when we're heading towards, that 98 level. That would be the area that you'd want to be looking at. We have another question, and that is about the IBB. So give me 1 second here, and I'll pull it up, and we'll see what's going on. IBB is IBB. There we go. Let's get the daily up on this. So we've got several stocks, and the IBB happens to be one of them that have made major ABCDs to the downside. We also have Goldman Sachs has done that. The banking index has also done that. So there's some of these indices are still holding up, relatively well. But that's neither here nor there. That's what we're looking at anyway. And also Goldman Sachs has held up perfectly at the had made a perfect Gartley the other day at that bottom. Let me put that one up to let you take a look at that. And I also wanted to reiterate what happened in the Minnesota mining. It also did the same thing. Now, if we take those lows out, that's why the easy part of this business is if we take those lows out of last Tuesday, this whole thing changes. Then we're coming down, and we're going to be really hard to the downside. We'll start to see a deterioration in some of this other stuff, and then you'll have a better idea of how far we can go down once we haven't really started a bear market here. So there's nothing to really to be afraid of. Now, the next one I wanted to share with you is the Minnesota mining, one of my favorite stocks. And well, it's not mine because I don't own it, but it was in the family for many, many years. My aunt had it, and she had it forever and made a lot of money on this stock. And hold on a second, you'll see. See, now this is one that could be breaking down. And because we're not very far away, wow, we're less than $1 away of this breaking. Boy, this could really be significant here. See, here's Minnesota mining, and as you can see, we went down and hit this low exactly on August the 12th. And if we start going below that, that's going to be a failure, and that could be another reason to see, the market heading down. Now, this market made a butterfly top, way back in February. And since that time, it's dropped just around $30 a share. And this is one of the best companies in the world, folks. It's really, it's really something. And if you guess where this company is located, you win a prize. It's a big one. It's almost like if you can guess what the symbol is for International Business Machines, and you can guess where 3M is from, you're going to be put in the higher echelon of the stock trading group here at TFNN. But fortunately, no one's claimed the prize as of yet. So still keep your cards and letters coming in if you know where where 3M is located. I'll give you one other hint. It's very close to one of the major medical centers in the world named Rochester. Boy, nobody can get it. Holy cow, it's really tough this year. It starts with an M. Somebody finally got it. Minnesota, very good. One of my favorite states. And it wasn't Rich Anderson that called in. So, because Rich is from Eden Prairie. Well, he's actually from South Dakota, but he lives in Eden Prairie, Minnesota, along with Naples, Florida, where he happens to be a neighbor of Larry Bird, number 33 from French Lick, Indiana. All right, we have another question about the what is he saying here? About crude oil. What would be the spot to think that crude oil has actually turned the corner? Well, I think you'd have to look at yesterday's high that came in at the 43 and change level. Okay, that would be the first spot that you'd want to be looking at it, because if you have another reversal, in other words, if you went down, you went up to 43.20 and then backed off to the 786 retracement with really bearish news. I mean, they were hammering the bearish side of oil like you couldn't believe today, and they've been right. They're supposed to hammer it. So it's still heading lower. So what you want to do is if it gets above that, that would be the safest trade. That would be the trade that John Logan would do, because he wants to buy, when something is going up, because the odds are that it's going to continue to going up. Because if prices go down, they continue to go down. If prices go up, they continue to go up. That's really what it's all about. In fact, that's why technical analysis really works, is because you're looking at things that should say that either they hold this level or they're going lower. That's the bottom line. So you have to add it with some type of risk control, but that's primarily what you're looking at here when you're watching some of these things unfold. I hope this is helpful to you, because I did a lot of work over the weekend on the. We got to take a little break here. We'll come back and we'll go over some other stuff. Oh my goodness.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, folks, and I've been asked to talk about the Bradley indicator. I've posted that in here to Tiger TV. Now, remember, the Bradley indicator is a purely astrological indicator, which means it's just based on cycle days, and it's weighted by the strength of the planet, Mercury, Venus, Mars, Jupiter, etc. And it's far from perfect, but when it works, it works very well. And over the past few months, it's been doing pretty well. And as you can see, we're looking for a low sometime in September. And I believe because of the historical nature of September and October being very, very negative, and the fact that we have a lot of things this year that could push us down, i.e. China, i.e. the debt market, i.e. the fact that we're going lower in our stocks, and i.e. the facts that some of these technical stocks have gone, absolutely bonkers, that we could see a really dramatic move, crash type scenario into September. We will not let any of this happen until we get below the lows of August 12th. Once we do that, I believe you're going to start to see the acceleration to the downside, and then especially if we get below the lows of July 27th. Remember, we've been going down since May the 19th. That's when we had the Mercury went retrograde, and we had a new moon at that time. Remember, we had a new moon on Friday, and so that was another indication that there should have been some type of a high coming in around that time. Plus, we had a couple other cycle dates around that time. So there's going to be a key date tomorrow, I believe, because Norm Winsky from Astro Trends asked to come on to talk about that. So we'll see what his work says. But you have to listen to the man because he really has a really feel for how these things are going. He's got 35 years or more experience. He was a member of NASDAQ, one of the original members of NASDAQ back in 1972. I first met him in '85, so he was just a kid. We were both kids at that time. So anyway, we're going to have him on the show tomorrow, and then Jim Twentyman will be our guest on Wednesday, and we'll be able to discuss. If you have some questions for Jim Twentyman, Jim has studied GAN almost more than anyone that I personally know, other than Jim Flanagan, of course. So live every day in an attitude of gratitude, and please do something nice for someone who has a lot less than you today. Thanks for joining us.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.